Hi, everyone. This is Carrie Milheiser with Coldwell Banker Schmidt Real Estate in Key Largo, and I'm joined today with Lisa Feliciano from Center State Bank. She's a mortgage banker, and we're going to go over some mortgage questions today. And before we dive into that, I'm going to let Lisa tell us a little bit about herself.
Well, I'm Lisa Feliciano, and I am the mortgage banker for Center State Bank. I have been down here in the Keys for over 30 years. So I'm very familiar and been doing finance and banking and all that whole time. So, and our office is in Key Largo. So, but pretty much that's a little bit about me.
Okay, great. Well, thank you for joining me today. I know we got kind of a lot of changes going on right now, and a lot of people are asking what's going on with closings. You know, we definitely are still seeing homes sell. We're seeing closings happening. But from a lending standpoint, what kind of things are you seeing changing in closing? Are you seeing any delays or anything like that? Can you talk a little bit about that?
So we're not seeing so much the delays as the things that we have to do now to confirm before closing. So like as of today, you know, there's certain disclosures people have to sign. The biggest thing is right now, if you're trying to buy a house, trying to get any kind of financing and have another mortgage, you cannot be in forbearance. So you cannot have requested forbearance on one of your other loans, because if not, then that kind of kills the deal. And even the ones I've been reaching out to all of our customers, please, you know, because I've even put something out on Facebook on my page, because some realtors seem to think, oh, well, great, now people can actually afford, because now they don't have to make a payment for it and they can request forbearance. It's not like that. So if you request, you know, forbearance is a good thing, because there's a lot of people not working right now. And if you really have to use it, that's what it's for. But if you can afford to make your payments, the best thing would be is to continue to make your payments so that you won't have this problem. So we are going back now to verify that, so that we can make sure that none of our customers actually have, you know, are in forbearance on another property. I just had somebody I knew real well, been dealing with her for a long time, contract ready, and I'm like, you didn't ask for forbearance, did you? She's like, oh my God, my husband did last month. I'm like, what? Like, well, now you have to wait a little bit till this clears up, you know? The other thing is you know, obviously 24 hours before we close, we got to verify their employment, you know, just in case, because things are changing daily with people's employment. Are they still working? You know, do you have a job? You know, if you're self-employed, are you still open? Are you still taking customers? So we have to verify all these things now to make sure, because, you know, we don't want it to, if you can't afford to pay, we don't want to be able to have a foreclosure issue and go back to the day where all of that happened. So, so that's pretty much the most of the things that we've been seeing right now coming up when you're having a closing that we got to verify.
Okay. And are you seeing any changes in requirements, like larger down payments being required or higher credit scores? Because, you know, we do have a lot of people doing the forbearance now. So is that changing, you know, kind of the restricted, what banks are doing in relation to mortgages because of that? Are they getting a little tougher?
Yes. So we have, thank God, we probably had like 20 to 30 companies that we dealt with other than our portfolio. So we have the benefits of being a bank, and we have our portfolio lending. We have not changed any guidelines or anything on that side. So everything that we've been doing from before, we're still doing it now, on that side. Then with our investors that we've been working with, they have tightened up the FHA credit scores. They have to be higher now than they were before. They increased it some, but then they did give us a little bit of a reprieve, and they dropped it a little bit. So that was good. On the jumbo loan side, they're tightening up a little bit. So it's more of not a loan to value thing and stuff. It's more of a rate thing. So, you know, they're charging a little bit more on the rates. So we've been doing a lot of those because we have better rates in-house. So we've been doing a lot of that stuff in-house too. So that works out really well for us. You know, some banks aren't doing cash out refis anymore. We're still doing those for our customers. We're doing them for the for the areas that we work in, Florida, Georgia, North Carolina, Alabama, South Carolina, the big states that we work with. The other ones, we stopped doing them. So some people aren't doing those right now, but we're still doing them in the state of Florida and a few other states. We're still working with that. But those are the biggest key things that I've seen tightening up, is, the credit score on the FHA, the government loans and stuff like that. And really the tightening is because of the servicing issues with banks. So the servicers are concerned because, they buy a loan from somebody, now they're servicing it. They're not the investor, they're just servicing that loan. And guess what? Now the money, people don't start paying, and then it creates an issue. So that's what we're seeing a lot of.
And kind of what, can you talk a little bit about what's going on with interest rates? We've kind of seen a low in interest rates.
Mm-hmm.
So it is a lot of good time to buy for a lot of people.
Exactly.
So, kind of what are you seeing with the interest rates, and do you kind of see them, think they're going to kind of stay where they are with what's going on, or what are your thoughts on that?
So on rates, we're still at an all-time low. I was laughing because I'm moving and I just bought a house and selling, but I found some paperwork and I was like, gosh, my first loan was at 12%. I'm like 3.25 is not bad, or whatever the rates are going at. So rates are still at an all-time low, even though people are like, oh my gosh, it went up a little bit. Yeah, some of them went up a little bit, especially again, some of your jumbo, deals have increased. But most likely what the mortgage industry is thinking ahead will be that they'll stay to where they're at, or they, after this, they might just drop back down to a little bit where they were right before they increased, just that half a point, maybe, it wasn't that big of a difference when your rates are at this point anyways, so, we're still doing some pretty good, giving out some pretty good rates on conventional financing and FHA. So, they're still doing 100% financing for some things, VA, doctor loans. So we still have all those programs. So it's not doom and gloom totally. It's still a good time to buy. People are buying. We get calls every day. I'm sure you get calls every day. I'm sure your office is plenty busy.
We're still busy.
So it's just a little bit unusual on how we're handling things, because it's not the face-to-face, or maybe you're not letting in so many people at a time in one house, or however you guys are handling it.
We're definitely kind of following the CDC guidelines of
Correct.
showing and doing most stuff virtually at this point right now. So,
and you can see we're working virtually with my background.
Yes, me too. So, and what would you recommend for a buyer? They're thinking about just starting the process of getting into buying a home. What things should they do to start to get ready to apply for a mortgage? They know they're going to need a mortgage. What things should they or should they not be doing in those few months before applying and getting ready to go into that process? I
think if they're getting ready, the biggest thing is, go to Credit Karma, pull your credit report, see where you stand, Definitely, if you're a realtor, they need to be pre-approved right now, Anybody that's not getting a pre-approval, for somebody is crazy, because you definitely want to have a pre-approval right now. So, hook them up with your banker, your person, and get them to get that pre-approval, okay? That's key right now, is making sure that they're pre-approved, because they may think one way, and this is, I'm going to be okay. And when we get to them, it's not, they don't qualify and we have to help them out. But really, just do they have some money saved? Can they get little things? How are you going to make it happen? Do you guys need to work on the contract and give, where they get, seller contribution back to make it work? I don't know, but there's different ways. But the key thing is, make sure that they know where they stand credit wise, and B, get them pre-approved so that they make sure they're not over shopping and they're actually shopping for something that they're qualified for. That's what I think.
And we are definitely seeing more of the pre-approval versus the pre-qualification. Can you kind of explain what that difference is of a pre-qualification versus a pre-approval letter?
Well, to be honest with you, let me see. A pre-qual is basically, I think I get confused because I only go by one thing because I only do it one way. Some mortgage people get on the phone and talk to their buyers and issue a pre-approval based on their conversation with these people. Guess what? They haven't pulled credit. They haven't verified all the assets and their income. And it's just not a good thing because it means absolutely nothing. Okay. The way we do it, we only do it one way. We require everything up front. So we've verified their income, their assets, their credit. They're ready to go. They're ready to buy. Okay. That's what you want to make sure, that when you get a pre-approval letter, that they're pretty much, that we've verified these things. Whoever you're working with needs to make sure. Some people, oh, well, we don't want to pull their credit. How do you then, if you haven't pulled their credit, I mean, I'm old school. I've done this very long time. So I'll do a lot of stuff by hand just to make sure they qualify for debt ratio wise. But then, have them show me their credit scores and stuff like that. But we still don't issue any kind of letter without going through our system and us have pulled that stuff, because it's important. I mean, you don't want us giving you a letter that basically says that they're qualified for something when they're really not. And then you're doing a contract, and then, there goes your contract. You have to get out of the contract. So that's the importance.
And that makes sense. And, as I say, we're definitely looking for a pre-approval now versus a pre-qualification, with, the guidelines being a lot stricter of, how much we really can do or show properties as well.
Right.
Well, that's all my questions I have for today. Thank you, Lisa, for joining me and answering questions.
Oh, you're welcome.
If anybody has any questions about buying, selling mortgages, please reach out to myself or Lisa. We're always here and happy to help.